Hello, finance enthusiasts. Welcome back to today's Finance News, your go-to channel for daily market updates and cutting-edge financial analysis. Today, we have three jam-packed updates about United States finance that just hit the headlines a few hours ago. If you are a true finance enthusiast, you do not want to miss these massive market shifts that are shaking up Wall Street right now. Before we start the video, if you are new to the channel, please do not forget to like this video and subscribe to the channel so that you can stay completely in the loop with our daily updates. Let us dive straight into the numbers. Update 1. The massive tech crash Wall Street is ignoring. Why Adobe is an absolute steal right now. Our first major update focuses on a massive valuation gap opening up in the mega-cap software sector. Adobe, trading on the National Association of Securities Dealers Automated Quotations, has taken a severe beating, dropping approximately 40% from its peak levels over the past year. The stock has plunged 36.1% year-to-date, sitting just above its 52-week low of $190.12. Yet, while the market value was slashed, the underlying corporate fundamentals improved significantly. During their recent Q2 fiscal year 2026 financial report, Adobe posted a record-breaking revenue of $6.62 billion, marking a 13% growth rate year-over-year. Their non-generally accepted accounting principles earnings per share came in at $5.96, representing their fifth consecutive quarterly beat, while total annual recurring revenue closed at $27.10 billion. Management even raised their full-year fiscal year 2026 non-generally accepted accounting principles earnings per share guidance to a range between $24.35 and $24.45. The market has punished the stock due to fears of artificial intelligence competition from platforms like OpenAI, Canva, Figma, and Microsoft Copilot, crushing Adobe's forward price-to-earnings ratio down to a remarkably cheap 9. In comparison, Salesforce trades at a trailing price-to-earnings ratio of 18, and Autodesk commands a significant premium, despite Adobe boasting an artificial intelligence-first annual recurring revenue north of $500 million. Financial models maintain a 90% confidence rating that Adobe is a strong buy, setting a baseline price target of $283.39, with a maximum bullish target of $322.51. This upside is supported by their Firefly platform approaching $300 million in annual recurring revenue, and their creative freemium monthly active users jumping from 50 million to 90 million. While leadership transitions, including Chief Executive Officer Shantanu Narayan moving to board chair and Chief Financial Officer Dan Dern departing, have introduced short-term noise, the core operating engine remains entirely intact. Meanwhile, tying directly into this technology boom, the private energy sector is experiencing a historic surge. A United States startup named EnergyX has officially crossed a historic $1 billion private valuation, entering elite unicorn status alongside giants like OpenAI. EnergyX possesses a patented extraction technology capable of recovering up to 3 times more lithium than traditional methods. With global lithium demand projected to skyrocket 5 times over current production levels by the year 2040, global manufacturing titans like General Motors and POSCO have already backed this venture. For investors looking to capitalize on the lithium boom, the final deadline to acquire private shares in EnergyX is July 16th. Update 2. Meta Platforms' shocking $50 billion bet. The massive infrastructure expansion transforming the energy grid. Turning to our second massive update, Meta Platforms has aggressively scaled up its massive data center project located in Northeast Louisiana. In a breaking announcement, the tech giant revealed it is expanding the Richland Parish facility to achieve an astronomical 5 gigawatts of compute capacity, raising the total capital expenditure to more than $50 billion. The project was originally estimated to cost $27 billion, meaning this recent expansion represents a near doubling of their initial financial commitment. This officially makes it the largest data center in Meta Platforms' global network and one of the largest single investments in artificial intelligence infrastructure anywhere in the world. Private credit manager Blue Owl Capital owns a major equity stake in this massive computing project, which has also successfully attracted institutional capital from financial juggernauts like BlackRock. Meta Platforms has legally agreed to directly assume all operating costs associated with the energy consumption, water usage, and foundational infrastructure. In March, the corporation secured a specialized infrastructure deal with Entergy Louisiana to directly fund the heavy electrical framework needed to support the massive grid draw. The local microeconomic impact has been immediate and revolutionary. Surging local corporate tax revenues have already funded unprecedented annual bonuses of up to approximately $50,000 for public school teachers in the rural district, a sum that exceeds the base annual salaries of multiple local educators. However, this $50 billion expansion arrives amid intensifying public opposition to massive data centers across the United States. Regulatory authorities and consumer advocates have raised major concerns regarding utility affordability, warning that the extreme energy demands of this facility could burden ordinary Louisiana electricity customers with significantly higher monthly utility bills. Across much of the country, the rapid build-out of energy-hungry computing hubs is severely taxing local electrical grids and causing surging electricity prices, triggering widespread demands that technology companies completely provide for their own independent energy infrastructure. Update 3. The Apple Changing of the Guard. Why the new Chief Executive Officer will outpace the entire market. Our third and final corporate update covers a monumental shifting of the guard at the world's premier consumer technology institution. Apple Chief Executive Officer Tim Cook is now less than 2 months away from handing over the active leadership of the company to John Ternus. Wall Street has embraced this transition because Apple is effectively securing the best of both worlds. Tim Cook will remain with the company as the chairman of the board of directors, allowing him to use his operational expertise to shield the firm from international tariffs, complex regulatory threats, and volatile component shortages such as the recent industry-wide random access memory and flash memory crisis. This leaves incoming Chief Executive Officer John Ternus completely free to roll up his sleeves and focus entirely on the product breakthroughs defining the artificial intelligence era. While other technology giants are spending hundreds of billions of dollars building out depreciating cloud data center networks, Apple is executing a highly cost-effective, device-first artificial intelligence strategy. By running models locally on consumer hardware, Apple can capture massive artificial intelligence rewards at a fraction of the cost. Following the unveiling of their advanced Apple Foundation models at the Worldwide Developers Conference 2026, reports indicate that Apple is in advanced talks with an artificial intelligence startup called Prism Machine Learning, which has successfully engineered a method to shrink large language models to run seamlessly on edge devices. This technical leap coincides with what is shaping up to be the most product-packed year in Apple's corporate history. The company is preparing to launch a highly anticipated foldable iPhone, massive hardware and camera upgrades for the upcoming iPhone 18 Pro, a complete structural redesign across the iPad lineup, advanced camera-equipped AirPods, and high-tech artificial intelligence glasses. Driven by an overhauled, highly advanced Siri artificial intelligence engine, This product ecosystem is expected to spark an unprecedented consumer upgrade supercycle, granting Apple immense pricing power. Even though the firm recently raised retail prices on iPads and Mac computers due to higher dynamic random access memory and negative AND input costs, consumer demand remains completely inelastic. Financial analysts predict that during 2026, the first full year with John Ternus at the helm, Apple stock will comfortably crush the broader Standard & Poor's 500 index and significantly outpace its Magnificent Seven peers. To wrap up today's broader market trends, keep a close eye on the private sectors driving these tech advancements. Remember that July 16th remains the absolute final investment deadline to buy private shares in the $1 billion lithium unicorn Energy X before their technology deployed with General Motors goes completely tight. And that wraps up our 3 high-impact, comprehensive updates for today on today's finance news. The United States financial markets are moving at a blistering pace, and staying ahead of these structural shifts in corporate leadership, technology capital expenditure, and underlying valuations is exactly how you protect your portfolio. If you found this fast-paced financial narrative valuable, please make sure to smash the like button, subscribe to the channel, and click that notification bell so you never miss a breaking report. Leave a comment below with your thoughts on whether Apple or Adobe represents the ultimate buy in this artificial intelligence race. And we will see you in the next video.